This will be a quick video, but an important one. The Mortgage Bankers Association just announced year-over-year mortgage application demand data, and the results are astounding. So we're going to talk about what this could mean for home prices moving forward, and I have an urgent warning for anyone utilizing a line of credit on their home. All that I ask is if this video brings you value, give it a thumbs up, and if you're new here, consider subscribing and make videos on anything to do with the economy in a quick format, not a ton of fancy editing, just the facts. So, mortgage application demand fell 69.1% year over year, with purchase applications falling about 39.2% and refinance demand plummeting 86%. Now, this is to be expected because anybody who could refinance over the past 2 to 3 years took advantage of the low rate environment that we had, and anybody who purchased over the past 6 to 8 months has only seen a rising rate environment. So, of course, there aren't many applications for refinances out there. In fact, we've seen rates rise from under 3% in October of 2021 to upwards of 7% in October of 2022. Now, the headline rates that are out there right now from Fannie Mae and Freddie Mac are reading about 6.8%, but they're always announced about a week or two behind as data comes in. However, real-time rates have now peaked to a high of 7.14% and much higher for non-prime borrowers. This is ultimately led between October 2021 and October 2022 to about a 40 or 50% decrease in affordability, meaning somebody looking at a $500,000 house in October 2021 would be looking at about a $300,000 house for the same payment in 2022. And that's all fine if at the same time home prices had been declining. But that's what we need to talk about today, because depending on which source that you're looking at, we've seen anywhere from about a 4.5% decline, according to the Mortgage Bankers Association, down to a 6% decline in home prices, according to Zillow. Both of those are far and away from where we need to be for home price affordability to come back in line. In fact, Redfin says that we need home prices to fall another 30% before we reach an equilibrium, while the Mortgage Bankers Association pegs that at about 20 to 25%, and Zillow also has about a 25% expectation in home price decline. So many people are exiting the market entirely with the anticipation that if they were to put down a 3% or 5% down payment, as many first-time buyers do, that they would immediately be underwater. And even for the more prepared borrowers, putting down 20%, as has been standard for many years in the United States until recently, they would still be underwater. So many people are exiting the market, which is ultimately going to cause inventory to sit on the market for longer. And we're starting to see cash buyers drying up, meaning that demand is just falling off of a cliff. Homes are sitting on the market, and ultimately those prices have to come down as people who do have to move and do have to sell have to offload their home in order to be able to qualify for a new one or be able to pay rent or whatever their situation is. Now, at the same time that we've seen this decrease in demand, we're seeing an increase in demand for government loans. Now, government loans typically allow you to put down lower down payments or have slightly more risky credit profiles, so lower credit scores, higher debt to income ratios, or as I mentioned, a lower down payment or some combination of those three. So what that ultimately means, and this is what we saw back in 2008, is that riskier borrowers are the ones who are still applying for mortgage applications, getting into homes, and then potentially not having the ability to make payments or dig themselves out of any sort of negative equity situation that they have. So when banks start to see these sort of risk factors coming into the market, they start to get scared. With home prices coming down, especially with lines of credit, which is what I alluded to at the beginning of the video, they can start to call those in. Now, I worked for a few years as a financial advisor and another few years as a mortgage banker, and many of my clients were utilizing lines of credit for everyday expenses, for home improvements, or sometimes even emergency funds being the only emergency funds that they have available, meaning if that wasn't available, they simply wouldn't have an emergency fund. Now, we've already seen this with Wells Fargo in 2022. They've called in lines of credit. Let's say that you owe $300,000 on your home. It's a $500,000 home, and you have a $100,000 line of credit. Well, Wells Fargo was reaching out to these people saying, you no longer have this $100,000 line of credit because we think that your home value could fall such that you would be in the negative by the time the home is done depreciating. And so that left a lot of people earlier this year from Wells Fargo without access to their lines of credit. And even if you have an outstanding line of credit, let's say that $100,000 you had charged $20,000 on your line of credit, they can still call in the remaining $80,000. Now, I've also seen reports of smaller local banks doing this, as well as some of the big boys like Wells Fargo. I believe that JP Morgan Chase isn't even offering lines of credit at this point. And so banks are starting to get wary of some of the loose lending standards that are out there with the expected home price declines, and they're starting to pull in those lines of credit, preparing for what is potentially a major decline in home equity. So my recommendation as not a financial advisor would be, if you have other access to liquid cash, make sure that you have that shored up. And especially if you're using a line of credit as your only source of emergency fund, make sure that you have other liquid cash available, because banks are starting to get a bit nervous about the potential for home price demand and thus the decline in home prices that's expected. Now, like I mentioned, as of now, we've only seen a 4 to 6% decline, so there could be a long way down to go. Let me know what you're seeing in your local market, though. Have you seen home prices continue to appreciate? Because that's certainly been the case in some places around the country. Or have you seen home prices fall off a cliff? I'm always curious to know what's going on and where you are. I really appreciate you stopping by. Catch you in the next one.